Hey everybody, Boris BK Forex. Welcome to our weekly technicals for the majors for Euro dollar, dollar yen, and pound dollar for October 15th to October 19th, 2018. And the big question forward next week is really not going to be economic data. It may have some impact, but really the much bigger question is really going to be what I call war or peace in FX land, because it's really the question, first of all and foremost, of whether they can settle on some kind of at least a preliminary deal on Brexit. And that becomes actually a very, very dubious and open question as we walk into this weekend, because we have the European Commission meeting on Wednesday, which is the big summit to essentially evaluate whatever proposal the Brits are going to put forth. Theresa May is trying very much to essentially put together a proposal that will effectively create a soft Brexit idea, where Britain will stay in a customs union within the EU, which will minimize the whole issue of the Irish border at this point, and effectively create a much longer transitional period. This is very much anathema to all the pro-Brexit forces within UK. It's a question of whether she can essentially overwhelm that minority within her own party to come up with some sort of a solvable solution. It looks to be actually only a 50-50 chance. So cable looks very vulnerable, and all the economic data that we're going to have on the plate this week on the UK side is going to be very immaterial. Europe is also having its own war at this point between the Italians and the European Commission in terms of their budget, and it seems to be that we're headed full force into a confrontation. And so that's going to be very interesting. That's not necessarily this week. It's going to be coming up next week, but you're going to have escalated rhetoric, and unless there is some sort of give or way from one side or the other, it looks like they're going to really force the issue and force the European Commission to reject the Italian budget as it stands now, which of course creates another political standoff in Europe, and I think puts another pressure on the euro as we go forward. And then dollar yen is just simply suffering from risk on, risk off flows in a very big way. So here also the idea that U.S. yields should be helpful, not really translating at all to help in dollar yen. So there's kind of a lot of very interesting geopolitical issues that are in many ways completely overshadowing whatever economic data we're going to get this week. As far as levels go, levels essentially remain the same, but what's interesting and what's very, very important to keep an eye on here is this whole 1500, 1450 level in the euro, because to me that level is critical. We start giving away that level, it really opens up a full-on assault to yearly lows here at the 1200 level, and that could be very interesting. So euro still looks very weak to me. We'll take a look at the charts in just 1 second in the calendar. Dollar yen really backed off. We talked about the idea how there was a big failure around the 15 level last week, and it really backed off that level. Risk-off flows now dominating. Only just an unambiguous 1,000-point rally. Nothing is bad, and stocks keep going, making fresh highs. Could really reiterate the up move in dollar yen. If we start to see more and more sell-offs in dollar yen, it looks like a drift back down to towards 111. And cable is, of course, the victim of Brexit. At this point, it's almost immaterial to just talk about economics. We'll take a look at a calendar here just to show you what's on the economic calendar. But I think all of it is going to be a 20-pip move one way or the other against the much broader political issues that are going on here. So U.S. actually kicks off on Monday with retail sales. That is that's probably the most important data set in the G3 universe this week, and we'll see how that trades out, because we're bullish this particular data set. The market is looking for a nice big bump of 70 against 10. We've had strong wages. Gas prices have also remained steady. The thing is here, though, is even if it's better than the month prior, but not quite as good as consensus, that would be viewed as a failure. So it'll be interesting to watch this. Strong retail sales, certainly a big boost for a positive bullish dollar story. But I keep wondering if the market is going to start discounting this as they begin to fear that the wealth effect gets eroded from further and further stock losses. And that goes into the critical Christmas spending season and starts to weigh on consumer sentiment. So we'll see. This would be, a very, very strong print here would be a complete rejection of the bearish scenario, and could really change sentiment right from the beginning of the week. but it has to be a really strong number for that to happen. UK side, we get jobless claims. We're also going to get CPI, PPI data. All of this data is relatively bullish. UK, we're bullish both on the fact that there's hot inflation and the fact that there should be better jobs growth. None of it, I think, is going to matter a whole heap of a lot against Brexit news, and that's really going to be the focus of the movement. So almost impossible to kind of really predict on a chart basis or a fundamental basis where we're going. It's really going to be headline driven, so beware. Everything can flip in an instant depending on how they go forward with their ideas. Then we also get the retail sales out of UK later in the week, and we finish up with a little bit of housing data, which has been consistently negative. Now, although retail sales have been strong, I think the interesting part here is that housing is still a very key component of U.S. economy. Higher rates really starting to hurt housing. I would venture to say that you could, some analysts have already said this, but I would venture to say that it's not out of the realm of possibility to say that housing is really in a recession at this point. That's a big part of the U.S. economy. If you get that piece declining and then waning consumer sentiment, I think that's the reason why dollar-yen continues to be more of a sell than it is a buy. So let's take a look at the charts here first. Here's the euro. The euro failing at the 1600, really getting weighed down by the Italian flows. I continue to believe that because the Italian politicians are essentially following the Trump model, which is take no prisoners, make no compromises, push the position to the limit structure. They're not going to back off. And if the populist government in Italy is not going to back off with without any serious challenge, then you could have a much more severe test of the 1400s. Having said this, though, I do have to caution. When I say they don't back off, I actually think that the positive euro story could be where they say, there's supposed to be a 2% budget. They came in at around 2.4. If the EC Commission says, okay, we'll give you 2.2, there have been a lot of arguments from many analysts saying that, listen, the Italians really don't want to break the euro. All they want to do is just get the best deal. So they ask for a lot and see whatever they can get away with from the European Commission. Anyways, my point is that if the European Commission agrees to some sort of a truce, some sort of a ceasefire with the Italians on a mildly higher but not as high a number as they originally proposed, that actually will be fundamentally long-term bullish. And if we can accomplish all of that somewhere around here, I mean, we'll know by next week for sure. But as long as we can hold these levels here and that becomes a positive structure, then you can really see the euro turning much more bullish as this becomes a higher low base and a move back up to the 1800s on just pure anti-dollar flows. But the question remains open right now, and I think it's a vulnerable trade. I really wouldn't want to get in front of it until I had some fundamental support and then technical confirmation. So I'd love to see that news happen, positive trade in the euro to confirm this higher double bottom. Then that would really create a much stronger structure. Right now, it's more of a sell than it is a buy. Looking at pound, your guess is as good as mine. Anybody's guess is as good as anybody else at this point. It's all a question of where Brexit goes. Certainly a hard, a no proposal for the European Commission. That's not the end of the Brexit negotiations, and it's certainly not the end of the whole thing. It's not an existential problem, but it definitely makes it, creates more stress in the system. Certainly it takes us, I think, to a possible test at 130. The more interesting question to me is, if we get bad news, how much support will cable have here? That's really the key thing, because I think there's still quite a lot, there's just a massive constituency that refuses to believe that there'll be no viable compromise between the two positions, and that UK is just simply going to spin out into a suicide pact with itself. So it feels to me that even in bad Brexit news, it's a buy to dip story to some extent. That's why I'm not that bearish cable, even if we have negative news, simply because if you look at the price action, they've been buying higher lows all the time. Positive news really puts us then possibly into a much more of a breakout situation where 33 is the key breakout zone, and completely reconfigures this chart towards a very, very big rounding bottom with now potentially a move straight up if they can come up with some sort of a feasible compromise. Now, dollar yen, we talked last week about the fact that we failed at the 1500, and it was kind of a pretty ugly failure. And we saw all of this week as a very big sell-off. We took out the 20 SMA. None of this is really heartening for any dollar yen bulls. The one thing that you certainly have a much greater round of support here is the 111 level, but that's 100 points from now. So more risk off flows if the Dow Jones takes out the 25,000, which I think it's very likely to do. At least let's say we could have a situation where we take out 25,000 in a extreme sentiment off sell-off midweek. That triggers the move towards the 111, and then perhaps if we get any kind of stabilization in equities, we could see a little bit of a bounce. But to me, dollar yen looks more like a sell the rally, just like equities are sell the rally trade than anything else. You are probably, I would say you're probably wrong at 114, and you're 100% wrong at around 115. In terms of then that means we are fresh highs to the equities. The bulls really have regained ground, and you've gotten annihilated on the short bet. It's tough to make the short bet after 4 or 5 days of straight sell-offs, but what I would say, if there was any kind of a rebound, even to the 1275s, 1300s, even to the 1300 level, probably a decent short at this point, given the fact that risk-off flow is still the much more dominant structure in the U.S. equity market. So that's how the week shapes up. It's a toss-up in cable, the Italian battle in euro, and dollar yen pretty much taking its cues from equity market rather than anything else that we see. Wish you guys the best luck, the best trading. Boris over and out.